Good day. Ira Epstein with your financial market wrap-up. And this wrap-up is for Monday, the 2nd of May, 2022, and the time now getting on is 6:25 p.m. Central Time. I want to be all smiles today. I got lucky. Well, I don't think it was luck. There was an embedded setup in heating oil that developed Sunday night. I put out by a full position. Heating oil is a very risky market. The market came down, let my embedded traders in, and it developed into the largest trade of this year, and they've already taken half off. There's plenty of losers. It's nice to be able to talk about a winner. It's in my written updates, and it was in my morning subscriber video, so I'm covered on it every which way, and boy, it makes for a year. It's hard to believe that it was a big trade. I don't want to give you the idea, a small trade. We'll see it in a moment here. So keep your eye on that. We're talking and buying $20, 20 cents lower in the 364 area and coming out up here for part of the trade. Okay. Why? I don't know. It was an embedded reading. It made sense, and that was it. It's no different than the other embedded trades when some work, some don't. The beauty of the embedded reading trades, if you ever use them with the Bollinger Band the way I teach it, is often, even if you're wrong, you're not wiped out. In other words, there's controls on it. Can you lose bigger? Sure you could. That's the whole idea of some of these trades, the risk-reward. But it's been an interesting time. Now, in the markets, let's get away from that. Before I cover everything, I'm going to have my next live webinar this Thursday. It's at 12:15. I open it. That's Central Time, p.m. Central Time. And I begin at 12:30 p.m., right on the nose, and I stop 20 minutes later. This is brief. Make your time for it. Bring your questions ahead of time. To sign up for this, all you do is take your cursor, move it to the top here, and there'll be an icon there. Click on it anytime during the video. Fill out the form. You'll get a receipt from us with your user ID and password to get in, everything that you possibly need. But there's also on that, when you have it, there's a link. And in the link, all you have to do is click on that if you have a question for me or a chart. Form will come right up for you on your computer. Tell me what you want me to do. Give me the chance to create the chart before you ask it during the webinar, because I can't create all these charts during the webinar. I'm one guy. I don't have the Kramer team that he has when he can call up all these charts. He's got people answering the phones, and they're doing the work for him, but he's the brain behind it. All right. In the S&P, we just have a disaster market. It just keeps coming down further and further. There's nothing friendly right in front of a Fed meeting. Do you think the Fed's going to come out and be dovish? The Fed has to get ahead of inflation. So they're going to be hawkish. The market knows it. A lot of that's built in. But you go in stages in a bear market. For those of you that are new to the markets, and I'm talking new in the past decade, you haven't seen a bear market. I have. I have been around them, I've learned how to trade them, and I bring that expertise to you, okay? Do you have it? Because you're going to be looking to buy the breaks, and I'm going to be telling my traders to sell the rallies. There's a big difference in a bear market. And as you can see, this game has changed. The Fed doesn't have the markets back. The Fed is now the headwind. It was behind the market. It would break, and for years, the market would have the Fed there and it would come back. And if you bought wrong, I'll hold that it's going to come back. Those days are long gone. When you look at the marketplace now, lower highs, lower lows, bearish. You're under all the key averages and you're about to get another bearish crossover. You're looking right now at the 100-day average in green. Take a look at this number. Coming in, it was over the gray. So now you get your bearish crossover. Come on. This is where you're at right now. So you've got the 18-day average underneath the 100. The 100's under the 200. It's a classic bearish market setup. Does it mean that you can't get sharp rallies in the market? Absolutely not. That happens. It's no different than, do you remember the flash breaks that we get, the crash breaks you get in the stock indices over the past decade? How many of those did you get? Market gets a big correction 3 days later, it's like it didn't matter. Well, you're going to get rallies like that from time to time in bear markets. 3 days later, they won't matter. Those are the things you got to watch. But that's where you're at. You're in a support area because you're riding the lower Bollinger Band. This is that Gorilla Glue trade that I made that name up because once you lock in, you don't get away from it until time goes by. And that's what you're counting on right now. Plus, you're in a market that is oversold. Now, did it embed? So we can't count today, Tuesday, because we don't know how the market's going to finish. Both numbers were under 17 today, Monday. If we take a look at Friday, both were under 20, and both were not under 20 on Thursday. You have an oversold market that might embed, but I think traders are just now going to walk away from this market and say, you know, I'm going to let the event take place with the Reserve Bank of Australia tonight. Tomorrow, nothing, but Wednesday, the FOMC, and then the Bank of England. But the FOMC is what we will be focused on. And let's see if the market, one of these old, it's taken everything down, sell the rumor, buy the fact. You might get that. I think the easier money is now out of the market. Be careful, but you should be overall bearish. The same thing in the Nasdaq. And if you look here, you have a market, again, we have to get to Monday. Both numbers under 20, both under 20 on Friday. Come on. I'm going to have to change the battery on this. Not that way on Thursday. You could embed tomorrow. So if you embed, do you want to then put your positions on going into the Fed on Wednesday? I don't think so. So this is a good time to go upstairs, do a few projects around the house, and I'd stay away from these. Let the markets enjoy themselves going into the Fed meeting. I'm going to tell you it's an oversold market in the Dow, but clearly in a bear trend. Keeps riding the lower Bollinger Band down, and so does the Russell. Now, the interesting thing is all the markets today, this market, let me come back to this. If I could, let me come back here. They all are staying over the Bollinger Bands. So they're not getting under them and saying, oh, I'm going to go into another leg of a crash down in the market. The chart that was filling right here, I'll come to you now, is the VIX cash. It's filled. And it isn't staying over the upper band. It gets there and it bends back down. It could embed and come back up to even higher levels. But I have been telling my paid subscriber videos, this is going to be a pretty hard number to get through. That doesn't mean that it can't. But if it fails there, you get a bit of a rally in the stock market temporarily. More important is this market's going to probably develop a stepping ladder where this is one base, then we move up like we are, we'll go sideways, develop a higher base, and so on, getting to a new norm for what the reading is in the VIX. In the T-bond market, you have the trend up, the bias down. You had your rally when you lost the embedded reading to the 18-day average of closes. You see that? And that's all it called for. So you've neutralized this big downtrend going into the FOMC meeting. That's what I think went on there. 10-year note, the identical thing. Here's the embedded reading. You lose the reading. You typically make a run for the 18-day average of closes. You get there and you often stall out. And that's what's going on. This market has to figure out what is next. Is it bearish? Absolutely. Would I tell traders to go short in an oversold market against the Bollinger Band into an event that's already been discounted to a degree? I'll leave that up to you. I know what I don't mind putting my hands in my pocket and telling my traders, let's take a look at the market after the report. In the dollar index, look at the power here. Each break since it's embedded under that number has been the spots that you've been looking to come in on. Now, there isn't big money in this right now because you're getting breaks that are so close to the Bollinger Band. On the other hand, you'll say, well, it's due to break and blah, blah, blah. And I'm going to go, why? Because you decided that chart has gone too far? Is that really a reason enough? I don't know. Eurocurrency's the flip-flop. It's just looking at the mirror image the other way. It's embedded. I've been telling traders, if you're going to play it, you want to be on the short side. The British pound moved to the right-hand side of the Bollinger Band in an embedded environment. If it weren't for the meeting coming up, I know I'd have been very aggressive here on the bear side. I have been on the Aussie dollar, in case you're interested. In Bitcoin, you're still in a bear market. You can see where you're at. The correlation is still pretty strong between these and the stock market as a whole. It's not tied to the gold market, and it's bearish like they are at this point in time. Then we get to the energies, the Julys. Now, you want to take your July Brent versus an equal one, the July WTI crude. The difference is about $4. Remember, we had the Junes on before, and they were a little different, narrower than this. That's about all. About $1 difference. Nothing there. The chart pattern's the same. It still favors the Brent over the WTI, but the fact that you're down so much, where are you going with it? That's the difference. Then you get to the Brent itself. Well, the trend is up, higher lows, higher highs. The support's here. You do see you're caught in this sideways action of a Bollinger Band, but it's not an overly narrow band. So there's room here for the traders to wiggle back and forth in the trade. WTI, not the same just yet. It could be. If you take out the highs of today, Monday, and that high was 104.19, well, then what happens is you could end up with the higher lows, higher highs, and open the door for the upper band. Now, you haven't gotten back to that upper band since early on in the invasion of Ukraine. So the market is basically, is it building a base for higher levels? Some traders are going to argue that. The trade of the day, as far as I was concerned, it's maybe I should retire. This was a good enough trade for my traders. Coming in, I'm looking at the market. It's embedded, and there's a number. I teach in the course where you get that number from. I don't make it up. It's right there in front of you the way that I teach it. Market came right to it. Goes back to the upper Bollinger Band. So long. Did I see it coming? No. Okay, did it happen? Yeah. What a trade. And as I said, the traders are still in half because you're still embedded. Until it's over, it doesn't end. That's one trade. There's plenty of losers along the way, but not as big as that winner, thank God. Natural gas, higher lows, higher highs. It's hard to want to be short this natural gas. Europe wants it desperately. Germany can't wait to get off Russian natural gas to get 35% of their need from it. How are they going to get it? They don't have the terminals. They didn't think ahead and do that. They were comfortable with Russia. They're under Mr. Scholz. They are very uncomfortable. Applaud this man. He's not Miss Merkel. Miss Merkel did her darn best with her, she had Russian roots, I get it, to try to make peace and keep things going. You know, I don't think even she would have put up with what Putin has done at this point in time. And now we're seeing that today Germany said they are ready to vote to no longer accept through the EU, if they can get it done, the crude oil. Now, Hungary may hold up that vote. They could veto it. But so far, they do a lot of talk what they're going to veto, and when voting time comes, they go with all their EU members. We'll see if this comes to a vote and what does happen. But that would be a blow for Russia, suddenly losing the easiest sales that it has to its own neighbors. They don't want their energy products. They're going to go abroad. That leaves them with other countries. Who are they going to go to? I guess Venezuela? No. China? Yeah. South Korea? Yeah, they'll buy it. Japan, I don't know if they're going to buy it anymore. Got different issues going on. They've hurt themselves that way, and it's going to be playing out for a decade minimum. I don't think the world's going to have a short memory of this. So I'll give it, it'll take 10 years is my guess. Being older, having seen these things, as to what the reasonable time is. So you put that all together, and you try to come up with game plans. Where do you get the game plans from? I hope me, in part. It's what my subscribers get each morning from me and each evening when I put out my written updates in the evening, my subscriber videos in the morning, and then midday morning, I put out another written update, and then the cycle just keeps going. All right, how do you get to the free webinar? follow me. Take your cursor, move it up. There'll be the icon. Click on it, fill out the form. Write me the questions you want me to cover. I'll be happy to cover them for you, as many as I can. We only have 20 minutes, okay? I'm over at 20 minutes. I'm Ira Epstein. You have a good day.